What's good, everybody? That's the end of 2017. The markets are done. That's a record year. And unfortunately, it's going to start with or finish with a down day. The markets were a little bit lower today. Actually, all of the selling came right into the close. And as I'm watching right now, the markets are selling off even more aggressively after the close. Probably no big deal there, but a little selling as some Washington news comes out. Good old Marco Rubio speaking again. But anyways, before I get started, huge mistake. I posted a video. I was asking for reviews. If someone could just go to Google, leave a positive, negative review, whatever you really thought about us here at Jazz Wealth, whether you're a client or not. And YouTube doesn't allow the link to forward on to Google, even though they own it. So you actually have to copy and paste that link. I'm going to put it in this video too. If you do me a favor, copy and paste the link. If I've helped you in any way, if you love me, you hate me, I just want an honest review. So when people look us up, they can make a good decision based on what others think. So that's that. That's it. That was a big mistake on my part. I didn't know that YouTube did that. Anyways, let's get into the markets today. How is the market affecting your retirement and your portfolio going forward? Basically, the markets are finishing right near all-time highs. Even though today was down, the Dow was lower by 92, the S&P was down 12, Nasdaq 100 down 46 on the day. A lot of that came from the financials being weak. Goldman Sachs actually had a comment that they have like a $5 billion charge coming or something. I didn't read into it a lot because I just saw Goldman Sachs had mostly recovered. But financials selling off there towards the end of the day really sort of hurt the markets as we went into the close. One of the big focuses today was crude oil. If you look at a chart of crude oil, you should be able to see that. Yep. Crude oil was up another 0.5% today. That puts it up 12.5% on the year. That also puts it above $60 a barrel. Not that that matters to you. You can see, obviously, oil prices are going higher. Every time we hit one of those $10 numbers, the media tends to focus on it. Anyways, crude oil is done for the year, 12.5%. Not too bad, unless you have to buy gas for your car. Anyways, let's take a look at a few stocks that may be affecting your portfolio today. Amazon. Donald Trump is literally single-handedly responsible for sinking Amazon today, but you know, it was only 1.5%. Not that big of a deal. The president tweeted that, hey, Amazon's getting richer and richer here, but the U.S. Postal Service keeps losing money. The U.S. Postal Service should charge more. Well, maybe that's the case, but it's not Amazon's fault that the U.S. Postal Service isn't charging more. In fact, Amazon actually uses the U.S. Postal Service's trucks on Sundays, so I don't know what they're complaining about, right? It's not Amazon's fault. Nonetheless, investors took the opportunity. They did sell off 1.5%, but you know, it doesn't matter. Amazon's up 55% on the year, so well done there, Amazon. That's where it will finish. Tesla's up next. I bring this up because we've been talking about Tesla. The other day, an analyst came out and said they talked to some of their store employees at the different sales stores, and they think they're not going to be able to deliver as many of these Model 3s as expected. Today, another analyst came out and said, we don't believe that to be true. We think that they'll actually meet or do better as far as selling those Model 3s coming up in the next quarter. It doesn't really matter. People are getting a little bit upset that Tesla's not sort of killing it anymore. They don't have that excitement. You know, it's just not there. So the stock keeps selling off, down about 1.25% today. Doesn't matter. It was up 45% for the year. So obviously people still love it in the long term. One company that people just don't like right now is Chipotle, and I don't blame them. Chipotle's got some serious problems going on, and I hope they figure it out. I love the restaurant, but here's the thing. They got another downgrade today. Actually, an analyst reiterated the fact that he was bearish and that the stock should underperform. So really not an official downgrade. He just felt like chiming in and saying, hey, we still think they're going to be weak. Here's the data that they use. This was really cool. So these analysts, they have all these different ways of analyzing stocks, and it's usually how much they sell and their performance and everything like that. This analyst went through and said, you know why we're downgrading the stock? Because we looked at Facebook and we stole that data and put it into our own system, and we track the number of check-ins on Facebook for Chipotle, meaning the number of times people physically checked in that they were at Chipotle, and they found that those check-ins were weakening. The overall number of people checking in was weakening. Now, to be fair, that may just mean that people don't check in every single time they go to Chipotle. Maybe that's not as exciting on Facebook. Maybe that feature isn't as exciting, but nonetheless, they noticed that those check-ins were lower. That's not the only problem Chipotle has. If you look at the chart there, you can see it's just selling off more and more. It was down 23% this year. They're looking for a new CEO. I'll be honest with you. I found the headhunting company and I sent them a nice little resume, nothing crazy. So if you don't see me one day and you see me as the CEO of Chipotle, I got to take that deal. I think I could turn them around. So I did apply. I highly doubt I will hear anything back, but I'll let you know. And that's about it, guys. That's about it for the markets. It's over. The best year for the market since 2013, if you're keeping track. Let's see what January holds. I'm excited for Tuesday. The markets are closed on Monday, but on Tuesday, I'm excited to see if people decide to take their profits going into the new sort of lower tax rates, and if that doesn't put a little pressure on the market. Remember, if you're a client of ours or if you're investing for retirement and you have many years until retirement, you want the markets to fall. You don't want them to continue to go higher. You want them to fall now while you can buy cheaper. And then when you get closer to retirement, then you want them to go higher. So if the markets do fall, it's a good thing. That's something that many, many people are looking forward to. I am looking forward to a long weekend. I appreciate every one of you watching. If you leave a review, thanks again. Have a great, safe, and happy new year. We'll see you in 2018.